traders, and welcome back to another video by Vertex Investing. Actually, before we go anywhere, I just want to say thank you to everyone who's shown appreciation for coming back on YouTube. As I said, it's been a while, and some of your Telegram messages have been amazing to read. It really does mean a lot. So thank you, and also thank you for showing Vertex support. I don't think I'll ever stop saying thank you for that. It does mean a lot. And I'm glad that you're seeing the value that's here on YouTube. So this one is basically in this video, I'm going to do basically a video version of what you see here. So this was a trade on GJ that I took yesterday. As you can see, I sent it in just before the trade actually got to the POI. Oh gosh, why has it done that? Just before it got to the POI, and then the interesting part is what happens here, and this is what we're going to discuss at this point. Now, generally, I don't like doing intraday trades purely because I prefer my time. And if you followed our videos and followed me, you know that trading is not the only thing I do. Because to be honest, obviously you can be a full-time trader, but for me, I don't think that there's enough longevity in doing trading alone, given how unpredictable trading can be. Regardless of how consistent you are, I still feel you need to have something, you know, in the background. And some of you know that I still run a physio company as well. So to be fair, swing trading for me works so much better. But this particular Wednesday, I had nothing to do, so I decided to sit in the charts, and this is what I saw. So let's get to where it was. Let's go here. Okay. And as always, the only part I'm not going to show is obviously the entry criteria, but this video is not necessarily going to be about the entry or the trade. It's going to be more about the management. Right, so obviously this is just purely based on what I'm seeing at the moment. Okay, so we've got our range high. Um, so I'm quite particular with my colors to be fair. So this is your trading range high. Whoa, why is it like that? Let's go back to 10. Okay, so that's your trading range high. Where's your trading range low? It'd be useful if I clicked on it. There we go. There we go. This is our trading range low. Okay, so obviously that is our trading range, and we know that we are basically in a bullish move. So this move that I'm looking for is completely counter trend. But what we can see is obviously mark out the POI that we need to focus on for going long to continue the move, right? So the interesting part is why did I sell? So what we can see is let's use this one. What we can see here is reluctance. Sorry, not that. Okay. Okay, so price is struggling to push higher at this point, right? And then what we have is a micro or minor BOS, however you want to call it. Okay, so we have this, okay, and then the next candle we have this. So at this point, right, when price actually broke structure, obviously the clear valid POI was here, okay. If you don't know why that is, go back and watch our other videos so you can work out why this is a valid POI. But what we can see here now is created a solidified low, and that now becomes a solidified high. So in terms of your intraday range, right, this now becomes your trading range high. So that's your trading range high. I'm gonna leave that there so you know which one it is. And this is your trading range low. Now, the key part in this one is your trading range low because, as we know, um, below every single high and every single low, we have liquidity, right? That's the assumption. Okay, that's the assumption. We don't know, but that's the assumption. So this is going to be our first target point or first partial point, however you want to see it. But you have to realize that this is where price can either just grab liquidity and continue, or it can have a change in trend um, from this move here. Okay, so we have this potential. Now, remember I said if you follow the Telegram, you know that we want to monitor uh, price action at this point. Okay, because basically with our entries, we look for two rules. Simple as that for our entries. Same with our setup. We wait for the two rules. At this point, only one rule is showing. You guys can work that out, whatever it is. Okay, so the key part we need to understand at this point, right, is what's going on here. So why why is that a valid reaction? So when you think about is, does it make sense for price? So that's bothering me. Does it make sense for price to react where it did? Okay, that's the first thing that you need to look at when you have a POI, regardless of the time frame, regardless of how you're looking. That's the main thing you need to ask is, does it make sense, right? Because if it doesn't make sense, and if you're just following like obviously we have a rule-based method, but if you're trading without sense, there's literally no point. There's no point trading at that point because you don't have any reasoning, and you're risking capital without any reason to do so. But what you need to think is obviously the rules in place that we have takes away the guesswork that you'll get with trading. You're constantly going to doubt yourself until you have solid rules. But with those rules, you still need to be somewhat flexible in order to make sense of what you're doing. So let's work out what is going here, right? So this reaction, normally when you get a reaction off a POI is a mitigation. So mitigation, my lines are red. So this is obviously a mitigation. Now you need to see is, does this mitigation make sense? Okay, because obviously for this to make sense, you need bearish order flow. So in this case, what we can see is obviously we have another mitigation here, because if we go backwards, and the whole thing is about working backwards, and you to be another reason why we had two rules is because you have so much to think about um, at this point. And bear in mind, we're moving on a 1 minute time frame. This is very quick, right? We have, sorry, we have so much to think about at this point that we start questioning, what's going on and what's going here and what's going here, and the price is already gone. So the reason why we had the two rules in place is because it factors all of this in. It factors all the thinking, uh, and it basically makes it into a rule-based process where you can actually just set your order and forget it at that point. However, obviously that sounds a bit more simple than it is, but that's the logic behind why we had the two rules. But anyway, we have a mitigation point. Now, did this mitigate something else? Yes, because what we can see is obviously if we work completely backwards, we had a solidified high here, solidified low, which got broken, okay? When we broke, we created solidified low, and then we created solidified high, obviously, from that. We already had that anyway, but then that's been mitigated, all right? Then what we can see is obviously the solidified low and our scalp structure or minor structure has been broken, right? What we can see is that's been broken. Where did that come from? We've got this weird candle here, but that's still a POI because price is efficient there, so it doesn't really have a reason to go higher up at that point. What we see is mitigation point here. So all that has been mitigated. So realistic price doesn't have a reason. Okay, it doesn't have a reason to go further up. So this is bearish order flow, which is intact. Okay, it makes sense. So the last point of mitigation was this. Let me get rid of that fat arrow I just drew. There we go. That is the last point of mitigation. Okay. So basically, you have to study the reaction to understand what is going on. Now, this, as I said, is all built into our two rules. So it takes away that thought process, because doing all that, you can sometimes miss, especially if you're learning, you can miss what's happening here. Okay, so that's why we have that rule-based system. And then this trade was fully taken off, I believe, a 30-second time frame, with the 5 second time frame confluence with the structure shift in here, which is why the stop loss was allowed to be as small as it is, because we had a point of invalidation just above it, somewhere in there. It was, I can't remember exactly where it was, but the stop loss is about 0.3 pips um, above that invalidation. But on the minute time frame, the point of invalidation will be here because that is the last mitigation point for that trade. But okay, at that point, obviously we let the trade run, and let me get rid of that. Okay, and then I took partials here, so I waited until it was 10R and I closed. Oops, I closed 5R at that point. Now, the point of this video was what happens here. Okay, and then we get there. Was here. Okay, so what we're thinking about in terms of order flow, when you're following whatever's happening, obviously we have this, right, which created this solidified low from this high. So we have a structure break, right? But in terms of what we expect is obviously we expect a reaction off here. But that's not the last mitigation at that point and didn't really grab liquidity, so it doesn't really hold much value. However, this one, what we can see is we create a low, another low, okay, mitigation, okay, create a low. So this is the last point of mitigation, and that has been fractured, it's been broken. So order flow, so bearish order flow has been fractured here, okay. That's the first sign of intent, and then it's been fractured completely. Once it actually broke this structure, that's when I closed my trade, but that one confirmed my my intention. The annoying part is what happens here. Let it go. Hold on a sec. It'd be quicker if I did it this way. The annoying part is here. So it actually does reach my target anyway, but I wasn't really fussed because I was right in the end in terms of what I expected. Price just flew. And the first sign of that bullish move, oh gosh, sorry, the first sign of that bullish move was all what has happened in here. That all came from this fractured of order flow from here. So the thing is, and another thing to point out is the fact that it respected a valid bullish POI here, okay, but it didn't really break structure, but it respected that, okay, so this is struggling to go lower. So that's another thing. And then it sort of just formed a range as it would when you get a sharp spike like this, because then you get stuck in this whole range and then you need to wait for that range to break. The thing that I mentioned was the fact that this moved down because obviously you probably had sellers at this point. Okay, this is all based on assumption, by the way. I'm not saying that this is full facts, but you can see that this, right, probably had sellers enticed at this point, all right? And obviously when you have this as a breaker structure, for some people, for me it's not, this is enticing sellers to come in. And what happens is when you get a valid POI, I'm not saying that is, to me it's not, but say if that is, because technically it is, but for, yeah, I don't like it, basically. But what we can see is obviously that's a valid reaction, right? People are getting enticed to carry on the sales and they get taken out. And then what happens is carries on. So this for me is what liquidity inducement is, in my opinion, okay, because it's enticing people to come in. So the key part to take away from this video is if you're going to trade intraday, you have to understand what is going on in terms of price and not get too greedy. If you're doing a swing style trade, I wouldn't worry about it too much as long as you understand where you are in price. So say if you say this is the 4 hour range that you're in, or daily range or weekly range, and you're up here, you know that you still need to come further down before any of this happens. Okay, so you can have confidence in holding your price and holding your trade. Whereas this one I monitored purely because I knew I didn't expect to be in too long. I knew I had this valid POI to continue higher. Um, and I knew that I knew my understanding of order flow was sound enough to know what is happening before it happens. So basically, not saying that I'm God or not saying that I'm, uh, a psychic, because you need to be able to anticipate these moves, and it all comes from just full on understanding. And the only way that you can unlearn this understanding is just by um, backtesting the concepts that you learn from these videos and understanding now what you are seeing here. So go back and study each of the screenshots and take notes, just understand what is going on because everything here is pretty much laid out to you. And I think there's enough content, as I mentioned yesterday, I think there's enough content here for you guys to take away and become profitable. It's just building your understanding. But I think I think I spoke enough for this video, and I hope that you've enjoyed it, and I hope that it was a different outlook for you guys to actually see. But for now, take care of yourselves and trade safe.